Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1219A, and today's date is March 3rd, 2017, and the title of the episode is, The Fed is Now Preparing $1 trillion in QE for the Upcoming Economic Crisis. Let's get into the economic collapse financial news. Now, out in India, we understand the government, they decided to call in all the paper notes. And they said they were doing this because of corruption, black money, crime. And we can see that this was a test of removing cash from society. And people, brought their cash in. And a lot of these individuals had it, in their homes, under their mattresses. And once this was done, they were taxed. Now, we are now seeing that this is having an effect on small businesses. The Sales Manager Index, well, this is one of the earliest monthly indicators of the Indian economic activity. February's data shows the catastrophic after effects of the December demonetization policy, which was going after criminal currency. The February headline SMI has fallen to an index level of 60.2. This is the lowest level in over 3 years. Managers are reporting a big drop in monthly sales for both the consumer and industrial sectors, with small to medium-sized businesses that they're reporting that the cash transactions, well, this is the hardest hit area. And what's happening is it's hurting business right now. And what they've done at this point has not helped the situation at all. But we could see that this was part of a different agenda. It was to ban cash. It was a test, just like they had the test of the bail-ins in Cyprus. This is what the central bankers are doing. They are testing different areas to see how people react, to see how the country reacts, the government reacts, because they understand that as we move forward, they need to take certain approaches to certain areas, one being cash, because they understand the bail-ins worked pretty darn good. In Cyprus, not many people complained. They just went along with the entire thing. Then we had Greece, and Greece realized what happened in Cyprus, and they started to take their currency out of the banking system. And what happened was, well, it was very difficult to do bail-ins because they lost a lot of the currency in the banking system. So then they thought to themselves, well, wait a minute. Okay, the bail-ins went okay, but then other countries realized what was happening and they were taking their currency out of the banking system. How can we stop this? Well, we can ban cash. And this is the point we're at right now, because they realize we're getting closer and closer to that point where the economy is coming down. Now, yesterday we talked about Caterpillar, and we know that their offices were being raided. We saw individuals with jackets from the IRS, from the FDIC, and the search warrant right now, it might be connected in part to a previous matter related to the company's Switzerland-based subsidiary that has been under review for more than 3 years. And it has to do with something with exports. So we can see right now that things are happening. We know sales have been declining for something like 25 months right now. The company is hurting. Just like all the other companies, sales are down, earnings are down, and they're laying off people, and they're closing manufacturing sites. They're closing, if it's retail, they're closing stores, and it's continuing. It's just not stopping. hhgregg, for instance, we know that they're having major problems. Well, they announced that they're going to be closing 40% of their stores. 88 stores they will now close. They're going to be laying off 1,500 workers. Of course, they're saying this is part of a restructuring plan. But really what this is that they're not doing well. Just like Best Buy is not doing well. And what you do when you're not doing well, you cut expenses. I mean, if anyone remembers Circus City or Crazy Eddie or any of these type of stores, they closed down stores and then they finally went out of business. This is what we're seeing today, the same exact thing. And we can see a lot more stores, well, they're going out. Now, Costco, on the other hand, because they sell things in bulk, we see a lot more people are shopping there, but they're getting hit by inflation. And they're going to be raising their membership fees. Because what is happening is the cost of everything is moving up right now. And they're starting to realize this, and they're starting to raise prices. Membership fees going up, cost of certain goods are going up in Costco. And we see right now that Costco, they still don't have a problem, but this is the first sign that they're in some type of trouble. And remember, Costco is the second largest retailer right behind Walmart. And we know Walmart is having a little bit of trouble. Now we see market service PMI, that has tumbled to 5-month lows in February, erasing the post-Trump bounce. And we're starting to see that all of these indicators, well, they're fluctuating right now. A lot of people had hope, optimism. You know, you hear the speeches, you hear the words. And I'm not saying it's a bad thing, but at this point, the way the economy is with the amount of debt and what all the past administrations have done, along with the central bank, and that is the main problem. You just can't say, okay, we're going to bring back jobs and they'll be here in the next couple of months and everything will be fine. First of all, we've gotten rid of manufacturing. We've sent this all overseas. We would have to rebuild the infrastructure, rebuild the manufacturing plants, train individuals. I mean, there's a lot of work, and this can't be done in a short period of time, because the economy, throughout all the other administrations with the central bank, well, they've been ripping it apart for years. And now the entire world is flooded with all of this debt, with negative or very low interest rates. And when we look, we can see that there are many individuals out there saying that we're not going to make it to the second half of the year. Now, do we know for sure that this is the exact time frame? No, we don't have a crystal ball. Let's be serious about this. But what we do know is that we've been watching indicators. And we've learned how the Fed can keep the system going by kicking the can down the street. The problem now is they have an individual in the White House that most likely is not going to cooperate with what they want to do, and that is globalism. This is a problem for them. Think about what's happening right now. And since it is a problem, they realize that the economy will not be able to survive, and they don't want to lose control over what is about to happen. And yesterday we talked about Bank of America saying the second half of this year place put on the S&P 500. We know Soros is betting $500 million on the second half of this year that the economy is coming down. There are many other individuals out there telling us this. We know UBS is saying that their credit impulse monitor, well, that has entered the negative territory. We know that the Fed now is tightening, and every time they tighten, the system comes down. And then we hear from the Fed, actually Deutsche Bank, who's out there saying that should the U.S. encounter a recession in the next year or two, the most likely reaction by the Fed is going to be $1 trillion in QE. The Fed is preparing for an economic crisis, and when this economic crisis comes, they're going to inject the system with $1 trillion in QE. Because what else are they going to do? They can't do anything else. They don't have the ability to make people just go out and spend their money, especially when they're losing jobs. I mean, look what just happened. hhgregg, 1,500 people are going to lose their jobs. 40% of their stores are closing. I wouldn't be surprised if we hear this from Best Buy next. And we're seeing many corporations out there, well, they're saying the same thing. They're not hiring thousands of people. They're laying off thousands of people. But the Fed says don't worry at this point in time. They're not forecasting any type of recession in the near future. Wait a minute. Didn't we hear this once before back in 2008 where they're not forecasting anything? I mean, this is for down the line. We're not talking about now. We're just getting ready. Isn't this what they did in 2008? Isn't this what they tried to convince us of? And there were a few individuals that were out there looking at the subprime security, looking inside of these subprime security funds and saying, well, wait a minute. Most of these things are garbage. People are defaulting. This can't go on any further. And I have to say, these individuals, they were scratching their heads too. How are they continually staying AAA and they haven't crashed yet, month on month on month as time went on? They couldn't understand it. And they actually predicted when they thought it was going to come down. And it never happened until eventually the whole system, the illusion just broke apart. This is what we're seeing right now. And the Fed is getting prepared for this. The EU is getting prepared for this. Countries are getting prepared for this. And if they're all getting prepared, you need to get prepared. We know countries are ramping up on their gold purchases. We know countries are recalling their gold. There is a reason for this. There's a reason why Greenspan, who was head of the Fed, is telling you to get gold right now because it's an insurance policy. There's a reason these individuals are out there saying something. And I'm not saying you have to like Greenspan or don't like him, but listen to what they're saying and read between the lines of why they're saying it. A lot of people will just listen to it and say, they don't know what they're talking about. It's ridiculous because the corporate media and everyone else told me that gold is just for jewelry. It's a barbarous relic. You don't need it. The dollar, that's what you need. Paper and ink. And all those people holding the fiat currency, well, they're going to be in for a rude awakening. We're already seeing inflation right now, which means the value of that piece of paper is going down every day. Think about it when it was first introduced in the 70s, when it was no longer backed by gold. Inflation was soaring. Why? Because it lost value right off the bat. Boom, it came straight down. And to add on to that, we're having these issues in the Middle East. The United States government, as we've been talking about for a very long time, well, they're losing their hold in these areas. And these countries eventually will not use the dollar for oil sales. And when that starts happening, the countries don't need to keep the dollars in reserve. They will send them back to the U.S. More dollars in circulation, more inflation. It devalues the dollar. That is what we're going to see. And we can see that this point, that everything that we've been talking about for a very long time is coming very soon. So get prepared for what is about to happen. And that is a complete collapse of this system we're in right now. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.